You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means we are back. It is Friday, time to talk some vol. Yes, it is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the TheOptionsInsider.com, as well as from the network upon which all of you folks are binging. Thanks to all of you who've been joining us throughout the year. We literally couldn't do it without you folks. You're the reason we're here, after all. Reminder for all of you who love Vol Views, hey, we love you all out there. However you get the content, we don't mind. But if you just listen to Vol Views, man, you're missing out. Make sure you're checking out the full network. And then, of course, if you want to go above and beyond, you want to join us for the official after party of Volatility Views. It's a rager. It's a good one, if I do say so myself, known as Options Oddities. You want awesome pro Q&As where, spoiler alert, we talk about vol freaking every week, it seems like, on the pro Q&A. So if you want more vol talk, then theoptionsinsider.com/pro has you covered. Also, speaking of Vol Talk, rumor has it Vol Deathmatch 2.0 in the offing. Flowmaster versus Mr. Scott Nations. 2 men enter. Only one can leave. You want to be a part of that? You want to submit topics? You want to judge the victor? Thumbs up, thumbs down, like the Roman emperors of old. Theoptionsinsider.com/pro, the place you can. And of course, the final pro trading crate of the year, the Dees Trading Crate. Get in there. It's a good one. The optionsinsider.com/pro as we go around the horn and see who's joining us on this not quite ultimate, but getting up there, one of the final vol views of the year. First, we go out to the hinterlands of Chi-Town, where we are joined once again by the man who now owns property all over the place. Outside of Illinois, in Indiana, I believe in rural Montana. He's all over the place. Mr. Russell Rhoads, a.k.a. the once future and present Dr. VIX. Mr. Rhoads, how goes your real estate empire, sir?
Things are going well. Just, continue to pack up books, etc. Making a little pile of things to go in the pro crate for you guys as I start to reaching the empty nest downsizing type thing, since you brought up the move. Actually, and we'll get into this a little bit. I was at the Chicago Fed this morning listening to Goosley talk about why he dissented and what he wants to see in the first quarter.
I heard the quotes from that on my briefing this morning. You were there, huh?
Did you? Yeah, I was there. So he's a funny guy. I'd never heard him speak in person before. He's a really...
His name is Austin Goolsby. You kind of have to be a funny guy.
And apparently he said if you Leisman from CNBC was interviewing him, and Leisman said, do you joke around about like you're doing right now in Fed meetings? And he goes, read the transcript. I speak exactly the same in those meetings. Thought that was kind of funny. I thought I was the only jackass in the world that just blurted crap out every once in a while, but apparently you can be like that and be Fed chair. Or not Fed chair, Fed president.
Oh, maybe. I'm not sure if it would be Fed chair. You got to be a little bit more, I think, in tune.
I'm not professional enough for that.
In tune with the administration out there. But nonetheless, interesting stuff. And then it's always an interesting time when we are joined once again by the clam pirate hunter himself. None other than the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com. If we put out the video, listeners, you could see the rock lobster rocking a sweet beanie. He's doing his best Canadian toque impersonation out there, along with the main uniform known as flannel. Mr. Rock Lobster, welcome back to the show, sir.
It is good to be back, wearing a flannel shirt and enjoying this cold Maine December day. The old man winter came in early this year in Maine.
Came in early indeed, but vol is never early or late, listeners. It arrives precisely when it means to, usually during the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was and indeed still is. We could spend the whole day just talking about today. Today's already been a wild day. We've done a lot of living in the vol market before the show has even started. In fact, today, yet another reason why it is a fool's errand to attempt to plan for this show any earlier than 5 minutes before showtime. Just throw it all away, listeners, because the narrative, the worm can change on a dime, and that's kind of what we're in right now. Of course, it was a Fed week this week, so a lot of people keeping their powder dry into Wednesday, waiting for the Fed decision. We all know what the Fed did by now. If you didn't, you haven't really been paying attention. It was the much expected quarter-point cut out there, but some folks like the Chi-Town Fed president dissenting, maybe throwing some cold water on the prospect for future rate cuts, which is not what some of the folks out there in the market wanted to hear. But nonetheless, the market did rally off of that news yesterday, I should say on Wednesday, and then coming in yesterday, more green on the screen. Uncle Mike was hoping to say his trademark saying, didn't get a chance to do it during the show. We did flirt with those levels later. And then coming in today, of course, on the heels yesterday, the one thing that really sucked things down on the NASDAQ side was Oracle, kind of two diametrically opposed quarters there, which is kind of wild. I don't think I've ever seen such two starkly different quarters back to back like that in a big Fortune 100 company like that. But check out the hot options report throughout the week if you want to hear more talk about that, or yesterday on the option block. And then coming in today, it seems like the bulls, at least for now, were kind of exhausted, but they're not quite as exhausted now as they were earlier today. The S&P, everything's pretty much red, but the S&P was selling off. We got even lower. We have since rebounded. We were threatened to break 6,800 after just hanging out 6,900 yesterday, threatening to break 6,800 in the wrong direction. Then the worm has kind of turned again, heading right into the start of the show. In fact, vol was getting juicy, getting spicy. Listeners, making me very happy that I liquidated all of my SVIX out there. We got up to almost an 18 in the VIX cash right before showtime. We were heading out there right around 17 3/4, 17.85, which put us up nearly 2 points, about a buck and a half, 1 3/4 points out there in vol land. And of course, in true vol views fashion, the worm turned right before the show, and all that vol is gone now. VIX cash back down to a 16 1/4. That's still up on the week. It's still up about half a point. And it's much higher than it was in our intraday nadir yesterday. We got pretty low in VIX cash yesterday. Our old pal Volley was up a point right before showtime at a 13.85. Right as the show started, all that's gone. 12.85 out there. So Volley is literally unched on the week. Now, if you're wondering, it hit a high of 14.37 earlier today as well. So a lot of vol living just in the first half of the session out there today. VVIX was back above the par strike, giving some of that back now, back to a 99, still up 7 points from where it was this time last week, but retreating off its intraday highs that it hit pretty much right before showtime. Looks like we got up to right about a 106, somewhere in that ballpark for VVIX as well. So again, yet another reason why Vol Views is, you can't really prep for it. We have our futures term structure screenshots. I have to go change all of those now as well, listeners. So yeah, once again, Vol Views just yanks the carpet out from under you right before showtime. But you know what? We wouldn't really have it any other way. That's what makes Vol Views such a fun beast. Let's go out now to the hinterlands of Maine while I update all of these statistics. Mr. Rock Lobster, sir, a wild week. Let's start there. What are your thoughts? I haven't chatted with you since Monday, so what were your thoughts on everything we saw coming out of the Fed and the market's reactions? And then, of course, today's, I guess you can call it dust up, sir.
Yeah, I'm still recovering from losing 4 in a row to Tucson. And
he's on quite the run. He's been taking his trivia steroids.
He's making the comeback of the century. Well, I think there's a couple of things. One is the Fed, for some reason, thinks we need to lower interest rates and start QE again, because QE was so successful for the last 15 years. The inflation, the shenanigans, and we, the market volatility definitely sold off a little bit because, wow, the Fed's going to just be pumping money in again. So they must be, they must be worried about inflation. Although this inflation, it feels, I don't know. I think there was a lot of structural things that happened, in 2022 that are not really present now. That, there's some differences in the inflation picture, but the government spending, Milton Friedman, government spending is where inflation comes from. They spend more money they bring in. And then you had this kind of, I'm just call it an abdication of duty by Congress. So they're not doing anything with the whole ACA Affordable Care. It's this is a fairly big number. So basically, from what I can tell, Congress is just going to leave everybody with this crap healthcare system we got and insanely expensive insurance. And I thought that might have contributed a little bit of the sell-off today. Just the fact that there's really no decent solution to so people can get relatively inexpensive insurance.
Yeah, they just yank the other one away, but yeah, there's no alternative.
I see getting rid of the subsidies because they're trying to okay, but where is Plan B? Where's the new plan? Nobody, nowhere. All the one side's we just got to keep government's got to keep spending money. Okay, that's really not a plan. And then the other side, no plan. So there's no plan.
It's all health savings accounts, sir. That will come to the rescue.
Well, yes. Well, you still have to fund them. And you have to be able to buy something with it. But be that as it may, anyway, so that I think, and then lastly, the market did not like Oracle or AVGO's numbers the last 2 days. So apparently, Broadcom makes the chips. Oracle's supposed to buy them, but if Oracle spends too much money buying them, nobody likes it. So now there's this kind of weird dynamic where, we can bid NVIDIA and AVGO up to crazy multiples, but then the market punishes the company that buys their chips for AI.
I asked this. I'm curious from your historical perspective. Have you ever seen two more diametrically opposed quarters? I'm not talking in a startup, but in not in a YOLO name, but in a Fortune 100 name, as Oracle did in the last 2 quarters back to back, sir.
Yeah, it is. I don't, and it's not even that their earnings, they're quote unquote are not profitable. They're just they're spending too. It is bizarro. You got 100 up and 100 down, whatever.
It's insane. They've been cut almost in half from those intraday highs they hit after the last one. Yeah,
it is. It's impressive. To say the least. but that also might be a little bit of a blow off here in the top for the AI. Like, so you're feeling like there's maybe that there's a little bit of a top in the AI situation right now. And that's kind of, and that's what it appears to be. So, maybe some of the rally's going to have to come from other stocks at this point. That's at least what I believe currently.
But there are no other stocks. Haven't you been playing for the last 5 years? So that's a Mag 7 or bust.
Yes, I've missed all of that. There are no other stocks. They're only the top 5. But at this point, it's like, even if they're successful, like Apple is 10 times revenue. Google is actually sort of Microsoft 10 times revenue. Like, they got to sell a lot of stuff, man, at this point. A lot of stuff to justify these valuations. And I could see some rotation out of these names where we have a lot less lift up in stocks going forward. Where that racing upside, but of course the Fed's trying to help, right? The Fed's trying to help by starting QE again because nobody's spending enough money on Nvidia or Microsoft anymore or Facebook. So we're gonna pump some QE in there, baby, and get everybody back there buying. It makes me think of trading places. Get back in there, turn those machines on. Everybody start buying those futures. It smacks a little bit of that, I have to say. So anyway, and again, since Congress again is both parties, okay, just not fixing anything, not cutting spending, not trying to find fraud or waste, not really doing anything. I don't even know what those guys, what they actually, the Beltway, what they do, right? Because their constituents must be yelling at them. So, and I think today's kind of sell-off was just a little bit of it was a little bit of just meh, everybody's like, thanks for nothing, sort of. And that's what it feels like. Just not great. Bullishness you need for markets to rally on low volatility, you need some certainty that you're seeing. Like, okay, we have a rate policy that's certain. We have some kind of government spending situation that's certain but not ridiculous. Okay, and there's always the upside because the U.S. economy grows, and there's always a lot of opportunity created. That historically has been a pretty big thing. But like right now, I think they would like to see a little more. We like to see certainty around rates. We like to see certainty around spending. Okay, let's try to make the healthcare thing a little better. So with all of these, again, Congress actually has a job to make things better. It reminds me slightly like during the great financial crisis, when everything was kind of melted down. And then they're like, we don't need to do anything. What's going on? I don't know what's going on. Like, they're all kind of running around like, there's nothing wrong. And then October, I think they finally got religion. Like, well, maybe we got a problem here. When stocks are down like 45 or 50%. And then they kind of woke up a little bit, I guess. But it's not as bad as that. But they're like fixing problems really is not what they're good at. And I think the market would like to see a little of that at this point.
Market would like to see a lot of things out there, listeners. It's absolutely wild stuff out there on the streets. Some hot numbers. I'm just crunching some of this data for later in the show, listeners, and looking spicy out there. Mr. Rhoads, I haven't had a chance to chat with you since we went across the pond. Oh, what a fun voyage it was on Tuesday. That was pre-Fed. That was a whole world away. First off, you've had some time to ruminate on your idea about V stocks as a better vehicle to play the Fed announcements. If you missed the European market brief, yet another reason why you should be checking out the full network, listeners. Russell dropped a bomb on that show saying V stocks his preferred vehicle for playing U.S. Fed announcements. How wild is that? If you have anything you want to add on that front, Mr. Rhoads, have at it. And then B, your thoughts on what we heard from the Fed, the market's reaction, and then, of course, fast forwarding to today and just the wild intraday swings we're all living through, sir.
Well, I did not make, I don't want people to think that, why does everybody think the Fed's favorite inflation indicator is PCE?
Someone said that once and it stuck.
So a reporter said it once when Powell said, well, I'm paying, I'm giving this a little bit more credence right now. And it turned into the Fed's favorite. I don't want everybody to think that VStocks is my favorite way to trade the Fed announcements or anything.
You said, I think your exact words were VIX is for losers, VStocks is the only way to go around the Fed. I think you said
that. No
that.
wonder SIBO won't work with me anymore. What I actually said was the situation that we were looking at, the VStock, which did not work particularly well. I think I lost about 50 cents in euros on that one. But what I was saying is if you think we're going to get a volatility spike in response to what the Fed did, and we didn't, but if you thought that was what was going to happen, you might have been better off buying VStocks as opposed to buying VIX futures. And that's just because the VStock, the VStocks, December VStocks future was right in line with spot VStocks, while the US VIX or US Volatility Index was at like 80 or 90 cent premium relative to the spot index. And when you have that sort of situation, and in fact, I think the December contract is lower week over week right now in the VIX complex, even though the index is higher. So you've got to take that relationship into account. And we didn't get a volatility spike. And, so that didn't work the way that I thought it would. I do think I would have lost more on VIX, but I haven't checked where VIX was, where the DSVIX future was when I put that other trade on and when I took the other trade off. But my impression is that I probably lost less using VStocks as opposed to using VIX. You guys are talking about the Fed stuff, and I just listened to one of the previous voters speak. And he basically was saying that he thinks first quarter of 26 is going to be some sort of an inflection point. That's really the work that they've done so far with the 175 basis points, et cetera. They expect to see maybe a little bit moderate inflation and growth kind of teetering along in the first quarter. And if that's not the case, they may need to cut more. But that really the Fed is almost in a wait and see situation. What I did find funny with respect to the Fed meeting was they cut like they said they were, and I saw a lot of headlines saying they indicated one cut next year. That's not, and the prediction market that I will never shut up about with respect to the Fed, it hardly budged with that statement. When I read that, I was like, all right, well, they've been pricing in 2 or 3 cuts over the course of 2026. What's it look like right now? It still looks like they've got a prediction of a little over 2 cuts between now and the end of 2026. So they're not believing the one cut thing. And I'm not believing the one cut thing either. You had a lot, just listening. It's fun to go to live events, and it's one of the things I miss about going downtown every day for work. But just hearing what people's concerns are, et cetera. Lots of concerns about the consumer, lots of concerns about how inflation is impacting the consumer. They had a guy that runs a materials company that was on a panel talking about his health insurance for next year for his employees is going up 23%. And I've never heard a CEO say this. He goes, we can't pass it on to our employees. We're going to have to eat it. So they just can't. He said, and we've got to keep that in mind. We don't want to try to pass it on and then we have 50% turnover. So inflation, it's out there. And I can't fathom. I don't even know if I wouldn't be surprised if the next move is hike. I really wouldn't. And it's going to be an inflation thing, not a growth thing.
I thought it was refreshing hearing him today saying, hey, as one of the few dissenters, we don't really have all the data. We're kind of flying blind
exactly
here.
What he was saying.
Yeah,
He was saying,
maybe we shouldn't cut. Yeah.
Once there's some assurance, once we're starting to get yet, he almost, I've said on here a few times that I'm just really not trading that much at all until we start to get all the information work its way through the markets, and we start to have a little assurance that you can handle that the numbers are accurate. In fact, Leisman from CNBC was interviewing him, and Leisman said, it seems to me the best way to trade the market is figure out when the economic numbers that were calculated are wrong and they're going to get revised.
there's
So the revisions seem to be having more of an impact these days than the original numbers.
Yeah, you definitely.
And that's going to be my weekend.
Oh,
looking at that.
There you go. Looking at that. There you go. Mr. Rhoads having the sexiest of weekends. It's a sexy day out there on the vol surface, listeners. Let's get down to some wild business. Again, this is another reason why prepping for the show early. Sometimes you think, we're gonna get ahead of it. We'll get the data out there. You throw it all away. Throw it all away, listeners. Especially this one, the vol surface. This is such a moving target as it is. You're really just kind of trying to grab a snapshot. That's what we did right before the show, and throw all that out, because coming into the show, the D's future was literally unched on the week, which was kind of wild, and the Jan future was up slightly. And then we had coming into it now, we have the D's future getting shellacked, down about 2/3 of a point from where it was this time last week. It was at about a 1675. I'm sure if I re-racked that right now, might even be a little bit lower. And we had the Jan future coming into this portion of the show at about an 1875, puts it down a little over half a point, about 0.55, with the cash hanging out about 1620. I do believe the cash has slipped below the 16 handle just even since we took this screenshot, so a few minutes ago. So vol is slipping through our hands as we speak, listeners. But you know what? We're just a tweet away. Listeners, from all that vol coming racing back. We like to look a little bit farther down the term structure to see what folks are pricing in. August of next year at this point, we always say it seems like an eternity, but it feels like an eternity right now. August of next year. So we're looking from one typically quiet vol period, December, all the way out to the other seasonally quiet period known as August. Of course, at that point, the midterms will be on the horizon. It's a wild time, but that's hanging out right at exactly a 22 right now. That is also the apex of our term structure here. And it's pretty much a gentle slope all the way up there, and just wild stuff out here. Let's go out to the Rock Lobster first. Mr. Rock Lobster, sir, what are your thoughts on what we're seeing out there in our ever-evolving vol term structure, sir?
The ever-evolving vol term structure. Well, it did flatten up a little bit today. So this is one of those things where you had like going into the, VIX dropped pretty hard after the Fed. We traded the 14 handle for the first time in a while, at least a couple months, I think, because we closed there. We closed in the 14 handle. Mm-hmm. And if this year is anything, I don't think we spent any time in the zone of the month this year. Russell can probably confirm that, but we have spent no time in my zone one, which is basically in the 13 handle or less. No monk zone for us, which is also the zone that trades like SVIX and other things like that tend to make a lot of money when we're in zone one. Because they're just a little feast. It's a future premium feast. But at least it looks like, kind of I'd say kind of a normal contango-ish curve. The December contract goes away next week. I didn't want to, but I closed all my VIX puts pretty early this morning.
Yeah, I was going to ask you about that. So you had what, 16 puts?
I had the 16s. I never got the best price for them, but I did make a little money on them, but never the best price on them. I did do okay with some UVXY this week. But I closed all that literally at the close yesterday. All my
good timing, sir. You didn't want to be riding that crap through. I was feeling you today. I was like, I wonder if the Rock Lobster closed his puts, because that would be the most Rock Lobster thing if you still had him today.
All year long, overall, it's been a good year, mostly because the market's been up and just being long is easy, right? Like you can't take any credit for being long, because the market went up. There was a lot of opportunity. my VIX put trading has just been awful, and mostly for the very reason that I closed a bunch of stuff yesterday and I closed stuff this morning. Like, okay, I'm up a little bit, so I guess I'll take it instead of waiting for zone 1 to happen, and the big money coming my way, not happening. It just the market does not want to do that. My personal view on that is that the whole inflation, interest rate, congressional spending thing is just it's off the hook essentially from a historical norm. We're basically we've institutionalized COVID era spending every year. The U.S. was not set up to do that basically, and we could sit here in fantasy land forever on it, but ultimately it's a destabilizing spending pattern, and volatility is higher. It's not that companies can't make money and do well and be innovative, right? That's the upside. But the thing is, you get all this noise from the government, the Fed, the whatever, right? All of these institutions that are supposed to be, looking out for us, and it creates very steep, let's just call it alternative trajectories. Tariff thing too. When you think about it, why does Trump want the tariffs? To raise money because we spend so much. That's, and, whether we keep them or not, who knows? But this is what keeps, the March contract is trading 1981, the Feb contract 1860. For VIX trading pretty close to the mid, which I think 18 is right about the middle for VIX, roughly. It's pretty steep contango. Normally we kind of flatten out as VIX goes up, but nope. So the market really has no problem leaving volatility higher for longer, which also means I just don't feel like there's a lot of natural sellers of volatility right now, of options, at least professionally, because you just have higher vol in general. So I think you have a fairly steep term structure, fairly high volatility back there for, as high as VIX is right now. Normally, I feel like it should be a little flatter, but that has not been the pattern this year at all. So it would not surprise me if, I hate to say it, but I think we're going to see a lot of the same volatility that we saw in 2025 is going to revisit in 2026. And it wouldn't surprise me if we didn't spend any time in the bottom quartile of volatility, and because basically the same problems we had last year are going to carry with us next year. And stocks are at a whole lot higher level starting. So, hold on to your hats, everybody.
Yeah, this time last year, we were threatening a 30 handle in the VIX cash out there, about 27, 28. Yeah. People forget that. And then we, of course, had the fun in April. Mr. Rhoads, same question for you. Anything catching your eye on the vol term structure this week, sir?
We basically have had we've had a very boring parallel shift. I don't really know else to, with the exception of spot. The whole curve shifted down slightly, looking at it where it was this time last week versus right now. The only things that flipped spots was spot. And I guess that's exactly what you would expect when the market's been bracing for something. I mean, I guess probably a textbook example of how the volatility market braces for what's thought of as a potentially major known unknown that might create a lot of volatility in the market. It comes to pass without the volatility in the market, and spot crushes. The futures were already not as much of a premium, or we're already at the spot goes down, but the futures go down even more because of the risk premium that they were putting in there and rewarding people that were thinking about being short them in front of what could have been a volatility event, but goodness gracious, it was not a volatility event. So if you lived in a vacuum, or you just woke up from a really nice 6-day nap or something, and all you got to look at was the week over week futures change, you would have thought this was the most boring week ever.
Yeah, you thought it was pretty sleepy. We were literally unched coming into the start of the show before all hell broke loose out there. All this hell breaking loose, listeners, is this amounting to a decent amount of VIX volume? Is VIX looking explosive today? The answer is a resounding yes. All it takes is the worm turning a few times before the start of the show, listeners, to gin up a whole mess of VIX volume. 1.12 million contracts on the tape already. It's been a little bit since we've been north of a million already by this time of the show. We finished north of a million many times recently. In fact, the ADV is 1.03 million, ticking up another 20,000 from this time last week. So clearly things are robust in VIX land. Again, December, not usually a time when we're averaging a million contracts a day, listeners, in VIX land. So kind of rarefied territory, but blowing past that right now. Let's go out to the top 10 first and see how things are shaking up. What is open for size right now in VIX land? And maybe yet another sign of just how much the worm is whipsawing out there in VIX land, because we are at exactly 50-50 in our top 10 right now. Can't remember the last time we were evenly split in our top 10. It has been some time, also showing you that you could have very diametrically opposed viewpoints in vol right now, and they could all be working out. In fact, our chat pointed out, I think they think about everyone won the crystal ball already today. We've hit all of our levels. So a wild week and a wild Friday to wrap it up, listeners. Again, 50-50 in the top 10. We have to go back and look a little bit to see the last time we were so evenly split. Cost you 194,000 contracts to break into the top 10. This was a hot option earlier this week. These are the Dees 15 half puts. People obviously listening to the show saying, you know what, 15 strike, that's for crazy people. But 15 halves, maybe they have a chance. 194,000 of those for number 10. Number 9, the ever meatier, the Rock Lobster's favorite, the Dees 16 puts, 225,000 of these bad boys. And number 8, I guess not everyone's listening to the show. Number 8, 229,000 of our old pal, the Dees 15 puts. It will be interesting to see. I mean, obviously you could have gotten them off yesterday for a better level than maybe you paid for them, but just going through expiration, have any of these 15 puts paid off? The answer is so far this year, no. And we've seen a lot of money go to die on those strikes, and they're open for size and for a long time too. They tend not to close them, which is the other kind of infuriating thing about them. Number 7, 238,000 of the Dees 25s. You know, what's more seasonally appropriate in VIX than a December 25 call? You know what? A little Christmas action in VIX. If you want a little bit of upside, there you go. That's your Huckleberry. Number 6, getting a little bit more, shall we say, optimistic. 238,000 of the Dees 30s. If all that's for the birds, you say that's far too up the strike chain for me. How about number 5, 253,000 of the Dees 20s. Number 4, back to the dark side, 255,000 of the Dees 18 puts. These are surprisingly all still, or a good chunk of them are still open. We've been saying for a while now, those were the hot option almost every day in VIX. We've seen these things explode. They were trading 60, 65, 70, 75 cents a week 2 weeks ago. They've obviously almost doubled from that level. So surprising to see so many of them are still open. If you have these bad boys, maybe a good time to get the heck out of Dodge on at least some of them. Number 3, 268,000 of the Dees 35s. Number 2, going out to Jan, our first and only Jan position in the top 10. 270,000 of the Jan 17 puts. And then the big dog yet again, they don't seem inclined to do much with this strike. 323,000 of the Dees 60s, 6-0. So once again, we have a wide array of opinions reflected in our top 10. But you know what? We really only care about one opinion. That's what does Russell think about all these crazy weekly trades? So let's find out. It is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, Mr. Rhoads, I'm sure it was a pretty frantic week. You could probably do a whole hour on just today's weekly volume, but what is catching your eyes, sir?
It actually was not.
Oh, too much action? People kept their ball, they took their ball and went home?
Yeah, I mean, I know I always refer to things in pages, but because there's 20 trades on a page. There was no day, and there's been weeks recently where every day I had like 7, 8, 9 pages of trades to go through. There was no more than 2.5 in any day this week in weeklies. Now, next week is standard expiration. That has something to do with it. But I also think maybe, as you said, take your ball and go home. There might be some of that with the next two expirations are December 24th and December 31st. So maybe it's like, hey, I'm going to trade this last standard one, and that's it. Hey, we'll see when I start checking these things next week. But all of that being said, on Monday, kind of a fun trade. And I'm going to do some digging and see if this is something that I kind of missed on. But somebody sold 1,500 of the D10th 20 calls for 11 cents, and they bought a same number of the D17th. Those are standard expiration, 20 calls for 53 cents. Makes me wonder. I want to go back to 2 Mondays ago and see if somebody rolled the 3rd to the 10th or something like that, and something I missed out on. But I don't know what the entry was on those that they sold for 11 cents, but whoever thought VIX was going to get up above 20 last week thinks it's going to happen. Thought maybe it would happen again this week. So maybe they're feeling pretty smart about
keeping the party alive. They had their moment today. Hopefully, maybe they got the heck out of Dodge.
You never know. So on Tuesday, and this is pretty interesting, I think, and I found these separately. I didn't look for them this way, but I think for some strange reason, somebody did this trade on Tuesday for the Wednesday number. Now, I don't know why they used this expiration. On Tuesday, VIX was at 1768. Somebody bought 10,800 of the D31st 25 calls for 82 cents. That was the big block I saw. The total volume on the day was around 14,000. On Wednesday, after the Fed number, about 5 minutes before the market close, with VIX at 1574, somebody came in and sold 12,000 of the D31st 25 calls for 59 cents. I think that's the same trader. The open interest changed accordingly, and I don't know why they would use the December 31st
why go all the way out to the end of the month? That seems just
I don't get the expiration, but I am not the one to blame.
We need to have a whole show, Russell, on VIX capital efficiency, because people clearly are not paying attention, sir.
I should write a white paper on that and charge $1,000 for it.
You should.
Yeah, free to your listeners though. On Thursday, with VIX at 1587, somebody bought 250 of the Jan 7th 22 puts for $3.90. The break even on this is 1810. That's a really nice trade. Even with the market up with VIX up right now, I wish I had come across that one. Because that really, I can't ever remember us starting off the year with VIX in the upper 20s, et cetera. So who knows? We're not going to have earnings. I don't even think we'll have an employment number in front of that one.
We had that January of 2020 when we assassinated that Iranian general. That gave us a little bit of a lift to start the year.
There's always the outliers, but the things that you can't anticipate, I think it's a pretty darn smart trade.
It seems like you're grokking more towards this meteor put side of the equation. Is that kind of your go-to now?
Yeah. I like to. I've always wanted to see, that VIX could go up and I could still make money on the trade. This is probably the best one I've ever seen. If there was like an award for weekly trade of the year, since it's the end of the year and we're all giving out trophies and everything, we should, this one's real. That 1810 break even versus VIX below 16. That's awesome. I'm going to take out a second mortgage. My kids are not going to go to school this spring, and I'm taking all their tuition money and putting it in these options.
I will make a note of that, because we do some of our trade of the years at the end of the year. Maybe we'll put that in there, and we'll put the other side of that, the 200 puts. That'll be the worst trade of the year.
And no, here's the worst weekly trade of the year. You ready? Okay. So today, about mid-morning with VIX at 1592, somebody bought 250 of the VIX D31st 30 calls for 40 cents. 9 minutes later, somebody sold 500 of those same options for 35 cents. Have either of you and laymen think that it's funny when you admit this? Have either of you bought when you meant to sell? Ever?
I'm sure it's
I've
happened.
done it. I'm going to admit it. I've done it.
I'm sure it's happened. I don't recall it, but I'm sure it's happened.
And I think that's a reverse trade. I think that I honest to God think, but what's funny about it is they their timing was horrible. This must be if somebody did the wrong thing and had to reverse it. And that 500 lot was actually done in two 250 lots. So I think one was a reverse, and one was a new position. I think it was a trade error. But beyond that, now they're short. Let's just say it was the same person. Now they're short 250 of these things at 35 cents. I assume they got to be trading at a higher price at this point, because just from what the market's been doing. But yeah, I think I found a trade error. It took that. That's my best guess on that. And then I kind of like this trade as well. With somebody taking advantage of the intraday spike here with VIX at 1769. Somebody sold 100 of the December 24th 16 calls for 222 and bought the 17 calls for $1.67. They took in a 55-cent credit. I mean, I know there are probably better ways to have played this with a put, etc. But making a bet, that VIX will settle under 16 on Christmas Eve is probably not such a bad bet. So I kind of agree with the thesis on that one, but not necessarily the way that they went about executing it. And they're risking 45 cents to make 55 cents. Probably couldn't do that with puts.
All right,
so
we got to get going. I just realized we're having so much fun talking Fed and everything.
I've been trying to go quick.
We're already
really
kind of coming up against it. We haven't even gotten to VIX options yet, listeners. So I will kind of burn through these really quickly because I want to touch on, obviously, the ETP realm as well. Today, obviously, a banger already north of 1.12 million contracts on the tape. The hot option, I'll just do the top of each day this week because there's a lot of flow this week, as you might imagine, on a Fed week. The top option today, the hot option in VIX land, 114,000 of the Rock Lobster's favorite D16 puts. Average price for these today, 37 cents. So we thought we'd put it to you folks right now, 37 cents. I think they're going for a little bit more now, so our audience could be cheating. But we said right now, gun to your head, D16 puts 37 cents, buyer or sold to you. 100% of our audience wants to buy those bad boys. That doesn't exactly surprise me. I think they have drifted north since those prints went up earlier today. Yesterday, 842,000 contracts on the tape. The hot option, nearly 50,000 of the D17 puts. We also asked you, I don't have the results here. We also asked you yesterday about the D15 half puts. Those were the top option yesterday, the hot option out there. Let's see if I can find the results. Here we go. Yeah, we asked you. They traded about 19 cents, nearly 50,000 times yesterday. And you want to buy them or sold to you, and about 85.7% wanted to buy them, 14.3% wanted to sell them. Once again, you had your moments for that one there as well. Wednesday, Fed Day, obviously the banger out there, 106,000 of the Feb 35s. That was your top trade, followed by number 2, 80,000 of the June 47 halves. We've been talking about 47 halves for a while. They're already going all the way out to June. But a wild day out there on Fed Day. Tuesday, pretty hot as well, 869,000 total volume. The hot option, 119,000 of the D20s. Average price for those, about 52 cents on Tuesday. And Monday, 732, so kind of the laggard of the week. The hot option, 45,000 of the D21s, listeners. We also saw our old pals, the D18 puts, going up 40-odd thousand times. We asked you folks if you wanted to buy them. They were trading $1.32 at the time. Buy them or sold to you. Nearly 90% of you, 88.9% said sold to you. Only 11.1% said buy them. Kind of a daring trade on Fed week when we know the vol is potentially going to go to die. So you folks diving into the fire a little bit there. Let's keep rolling because we're already coming up against. Let's get out to SVIX land. SVIX was kind of unched up slightly earlier in the show. Now it's up about 0.75 of a point, 21.85 as vol has continued to erode throughout the show. Putting up about 5,000 contracts today. The ADV 5,700 down about 200. And UVIX, when we kicked off the show, was at about a 7.5. That puts it down about 0.25 of a point. I'm going to go out on a limb and say it is lower now. Yeah, 7.15 out there, listeners. So it's down about 0.6 points on the week, and putting up some numbers out there. Let's see, 61,000 contracts on the tape already against an ADV of 50,000. Mr. Rock Lobster, first off, if there's anything that caught your eye in VIX options this week in terms of prints, have at it. And then B, what is catching your eye in the world of SVIX and UVIX, sir?
Well, early in the week, like there was a lot of put action.
Yeah.
All those cheapy VIX puts. I mean, I had a lot of students trade them very well. Picked up a lot of like 18.5, 19 puts last week, and sold them all yesterday. So did pretty well. I did get profitable closes for them, which is finally, it only took me till the last month of the year. And you know what I still suffer with in even the vol products like UVXY, just general liquidity, just not like the markets are half a dollar wide, $0.75 wide. You can do things in there. It's just not easy. So I would say I think one of the harder parts is just the general liquidity factor is not totally easy there. But I think that's kind of the bigger thing. And I think there is some opportunity. There's certainly some opportunity in them right now. So I'll check it out Monday again. I don't have to get all after closing a bunch of trades today. I'm not anxious to just add a bunch more stuff into the close on Friday, but there is some interesting pricing here going on. There's some real. There is some real juicy decay with the contango that we have. So I think from an opportunity point of view, they're not in a bad place for next week, because they're at that point sometimes where there's so much potential decay in the product that you get strangles and calls and puts in there for just like very, very cheap prices relative to the net decay. It's kind of a nice little trade. So it's not, it doesn't look bad. That's all I'm going to say there.
Doesn't look bad. Mr. Rhoads, same question for you. Anything lighting up your tape in the world of your beloved SVIX? And also we have a question come in from the chat for you from Option Guy. He wants to know, is Russell still doing his weekend UVIX trade? I'm going to assume the answer is no, because you're kind of out on SVIX, but maybe you have surprises for us.
No, I did it last weekend because I still had SVIX, but I'm totally out of SVIX now.
Okay.
So I'm not, and I know that it has not done particularly well over the last few months. But it only takes about it takes one weekend volatility spike to overcome that pretty quickly. I think year to date, it's down slightly at this point, which is kind of shocking. Well, our biggest volatility spike occurred on a Wednesday. So yeah, got to get them on the weekend for that to work. So yeah, I'm sticking with that. I'm looking for a spot to put SVIX back on. That's all. I probably got to stop blinking, because that's the only. Every time you blink, the market's rebounded. So maybe I need to be a bit more aggressive on that one. I did notice on SVIX. I did want to point this out. They the strike that they're using now. The strike has gone up as time has gone by. And for instance, they rolled from Dece to January, and they own the Dece 30 calls. Now they own the January 40 calls. So I thought that was kind of interesting. It looks like, I don't know if it's concerted effort or not to spend a little bit less on that protection, but originally they were always buying options in the mid-20s.
Yeah, I'm guessing that's probably just a cost factor, I would think. Yeah. But yeah, getting a little bit less protection, listeners, if that does spook you. Let's really quickly run through the rest of these, and we got to get to the crystal ball. Like I said, UVIX at 715, down 0.6 of a point. UVXY post-reverse split, 42.40, down almost 2.5 points. It was down about 1 coming in to start the show, so it's given up another almost 1.5. Putting up 36,000 contracts today. The ADV 63,000, down 24,000. Before you say, wow, that's kind of usual standard for these reverse splits. It tends to gum up the volume for a few weeks. VXX back below the 30 handle, 29.5, down about 1.25 points. Putting up 47,000 contracts, so go figure, breaking the 30 handle in the right direction for a lot of folks, I guess, is ginning up some paper. The ADV is 43,000. That's actually down 1,000 from this time last week. But now it's time to see if all of us are down. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, as we come into the end of the show, it seems like we had the bounce kicking in a little bit now. It seems like we're kind of tilting back the other way. S&P off almost a full percent again. Dow off about 1/3%. NASDAQ off nearly 1.5% at 1.4%. And VIX cash was drifting lower, got to 1586, tilting back the other way up to a 1597 right now. So again, we are whipsawing all over the place. As our chat pointed out, most of us won. I'm not sure if we kissed a 15 quarter. That's where I was. I was really feeling the vol annihilation. Not quite as much as the meatball, though. The meatball was feeling 1441. We didn't quite get there in the cash. Russell was looking good until he wasn't at a 1570. Again, just shows you how capricious the vol gods are. But you know what, Russell? I feel for you because we were there, then we weren't. I'll let you go first for next week. What are you and Gretchen feeling, sir?
Where are we at?
We were just a little bit shy of a 16, 1597. If I rerun it now, it's probably 8 handles away.
Ow. Stop it. Where's
now we're over a 1604, just ticked. So there we go. We keep moving. But I'll leave it at
1545.
1545? Okay.
Yeah.
All right. And Mr. Andrew, you get the pride of place of going next, sir. What are you feeling?
Because I got to run, but it's odd. I just don't feel I don't like this. I don't like anything I'm seeing. So I'm going to go I'm going to go 1776 because you know what?
Ooh.
We need a tax revolution.
A tea party, dare we say it?
We need a tea party. I'm going, although that's not the tea party year, but I'm going to go 1776.
There we go. All right. And if folks want to check out your flashing, where should they go? What should they do?
Yes, if you want to be flash, optionpit.com. I'm about to launch my flash scanner. I'm pretty jazzed about it. And if you want to see all this flashing and stock dip buying and all kinds of stuff like that, come on over and get flashed. Optionpit.com, 888-TRADE-01.
Get flashed. It will change your life in many ways, listeners. When the rock lobster when this guy in a beanie and flannel flashes you in a dark alley, it will change your life. Optionpit.com is the place to go to learn more. And last but not least, I've been delaying because I'm not sure what I'm feeling here for this time next week, listeners. We got some wild stuff in the offing. I'm going to say I do feel a little bit more juice. This vol fade post-Fed has been quite aggressive. I'm not sure if I'm feeling quite the levels I was feeling this week. I'm going to say for this time next week, I'm going to say 1656. All right. There's our juice levels. Let me look really quickly. We got 1514s in our chat. 1635, Option God, coming close to me out there. Get your prognostications in now, listeners. Our producers will check if any are winners. Then you too shall have won a fabulous prize. And Mr. Rhoads, sir, if folks want to win a fabulous prize in the form of reading your vol wisdom, where should they go? What should they do?
Just follow me on Twitter. That's just the best place. Whenever anything happens, I use all over it and links me to it, etc. So
here's the flip side of the vol debate right now. We always talk about closing your VIX calls, monetizing them very quickly. Are VIX puts in that scenario now, sir? Do you have to monetize those pretty quickly? Looks like we're turning again, sir.
It feels like it.
It does feel like it, doesn't it?
It does feel like it. And I wonder if, I know we're over time, but I worked at a proprietary trading firm for about 3 or 4 years, and there were times that strategies just felt more and more and more difficult, and maybe that's what's going on with buying puts. It's more difficult, which indicates that that's not going to be a good trade for a little while.
Yeah, I was eyeballing some immediately post-Fed this week. I was on the show, I think, with Mr. Overby at the time, and I thought, I don't have time to babysit these. I knew I was going to have to get out of them pretty aggressively. I just didn't have time. So I was, I'm not putting them on. Ended up being the right trade, even though we did have some moments there where the puts were looking pretty good. But maybe that's a fun flash poll for next week. Are the puts the new calls? You got to monetize them pretty quickly. Watch, we'll post that and we'll drift down to a 1435 and sit there.
We'll close the year at 1232.
Yeah, exactly. So maybe maybe that'll be the kiss of death of vol. Maybe I should post that. All you short vol folks will love it. In the meantime, folks, make sure you're checking out our friends over there at Tasty Trade. If you want to put all of these trade ideas into action, tastytrade.com/podcast is the place to go to check out what deals they have in store for you. They love all of our audiences, but every broker, trust me, every broker wants the Vol Views crew. They know you're the hardest of the hardcore, the best of the best, dare I say it, and they want you on their platform. So they're bringing their A game for you. Check it out, tastytrade.com/podcast to learn more. That's going to do it for us on the on-demand side. If you're hanging out in the pro, we'll be back instantaneously in your ear holes to ruminate on a whole bunch of wild trades from this week in the official after party of Vol Views, known around the globe as Options Oddities. Then, of course, we're back again next week, another episode, Volatility Views. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.